jump over to Volt. So crypto realized Volt did obviously explode higher. You see that with this yellow line going from the kind of mid 30s up to the 60s. So a really big rip there. And then implied vols kind of followed suit, that they've gone higher as well. So we went from the 40s to the 60s, maybe even 70s now, as Bitcoin vol has been so resilient. So really, really almost doubling, not far from doubling of implied volatility. Obviously, the initial move on Thursday as SVB was going down was to the downside, as we were correlating with stocks. But then we've obviously, after the weekend, we've broken away and we've just gone to the moon, right? We've gone from 21K to 26K in a heartbeat. So anyway, implied vols went from the 40s to 60s. Volatility carry kind of shriveled away to zero. So you can see all these red bars that we did have were quite healthy. Carry to be able to earn pretty much evaporated as realized went up so much. And the truth was, even though you had a lot of carry in there, the implied vol levels in the 40s going into a week where you got non-farms and CPI didn't make a ton of sense to be short loads of gamma, even if the vol carry was showing you that, basically, right? This is something that someone asked me on the Discord group that we run last week, saying, yeah, you're saying there's a lot of vol carry, so should we be selling gamma here? And I was like, to be honest, at these vol levels with these catalysts coming up, I'd stay away from it, right? So at the time, that was the response. Now, obviously, the largest moves have been to the upside after the news came out that the deposits were going to get backstopped. This FDIC 250K limit. Well, obviously none of the depositors were such small deposits for SVB, because it was all venture cap startup money. So they've basically been bailed out, so their deposits haven't evaporated. We went from pricing in about 3 to 4 hikes this year to like 1. Obviously, I think that's bounced a bit since then. Despite the testimony from Powell last week really pushed those terminal rates higher to 5.7, and for us to be looking at a completely different world 1 week later is quite unprecedented. And those type of rate moves have not been seen since the financial crisis of 2008. Okay. Anyway, he said 50 bit hikes were not off the table. I think we can be pretty sure they're off the table for March. That's what my gut is saying anyway. But obviously, we've seen a hot inflation print come out. It's not crazy hot inflation print, but it is a hot inflation print, just came out today. So we've got that pushing against the idea that the banks are in trouble. But now that the banks have been backstopped, now that we have got that hot inflation print, a 25 bips is being priced in by the market, and I'd say that's probably fairly accurate. If we look at term structure involved, flipping into backwardation as you would expect. So really, really strong bid coming to the front end, but the back end barely moving. So you can see here, the back end's kind of very slightly higher, maybe 2 vols. When I say the back end, we're talking about 6 month stuff. Obviously, options do trade out to December, but we're looking at 6 month. Now, the interesting thing, so whilst the front end caught about a 20 vol bid, if you look at what happened to the ETH Bitcoin vol spread, that kind of collapsed from 5 to 0 in the front end, stayed where it is in the rest of the curve, but just the absolute front end, the weekly stuff, collapsed to flat. And that's obviously because of the spike in realized vol on Bitcoin and the fact that Bitcoin's moving more. Okay, so that's why we always said, if you want to get into this spread and you like the fact that it's cheap historically, you want to park yourself in the longer end of the curve. So we're actually parked in September. As you can see, that hasn't moved at all. So even though the realize has not done well for us, and you're looking at 10-day and 30-day realize around 0, and that's why the implied in the front has gone down to 0. If you've got the trade on in Vega space in the longer part of the curve, then it hasn't really done you any damage, basically, right? And that's kind of how the majority of our implementation was in Vega space. Okay. Now we continue to like that Vega spread over the medium term, but we do recognize that BTC could easily continue to outperform in the near future as this narrative is building. Get your money out of the banking system and you diversify some of it into crypto, right? That kind of seems to be the narrative that's catching hold right now. Okay. If we look at SKEW went a bit ballistic on the way down Thursday, Friday. You can see ETH SKEW, Bitcoin SKEW, both of them went to like around 10 vols for puts. As you can see here, that was the kind of vicinity they got to. They have since collapsed, obviously, as prices have ripped back higher and they've collapsed back down to 0. This was as of last night. So actually, with the move higher above 25K, I wouldn't be surprised if the weekly calls have gone even further bid. Now, the rally, obviously, it took ETH back to about a 2 to 3 vol premium still for puts, whereas Bitcoin went pretty much back to neutral across the whole curve. Now, this type of volatility in SKEW, to me, just reflects confusion in the options market, right? You've got out of the money option flows that are responding to the headlines, and investors are just piling into out of the money options, and that's moving the SKEW because liquidity is obviously, a bit more skittish now, right? The amount, if you trade like a few thousand Bitcoin options, you're probably moving vol more than you were, a month or two ago, because people are just a little bit more fearful right now. Okay. This trustless aspect of BTC is obviously being cheered right now. And this kind of gold is catching this gold-like safe haven bid. And I guess we're going to find out how safe it really is in time. Okay. I'm not really someone who subscribes to the idea that it's really as safe as gold. I understand that there is some element of it, but I just don't think enough people have come around to that idea, right? If we had got that massive amount of institutional adoption that we thought we were going to get, and it hadn't all fallen apart in end of 2021, and it was established in everyone's minds, and it was a part of everyone's portfolios, and it really was considered to be digital gold, that's one thing. I'm just not sure that we're here yet. That's not to say I think we're definitely going down. I think spot is proving to be very resilient, and I wouldn't get in the way of it right now. But I'm just not sure we're completely out of the woods yet on this stuff. And whilst we may test 28, 29K, I'd be pretty surprised to see us in the 30Ks, before having another test to the downside, basically. Okay, so but that's my own sort of bias and my own sort of gut as to, because if you look at the charts as well, you can build a case for us to test 28, 29K within the context of a broader bear move that isn't complete yet, basically. So that's kind of where my base case lies. Okay. All right, we move over to the flows. So we did get a good volume week, about $5 billion notional trading. So recovering from the week before. Obviously the SVB fears gripping markets, put protection coming in, put protection buying coming in. So that's this stuff here. People buying 17th of March. So that's this week, and 31st of March expiry puts, 18K strikes. And actually, sorry, it's 21K to 18K strikes. So that's the zone that they were generally buying. We did also see a put fly in April in reasonable clip. There's a 16K, 14K, 12K put fly. That's these orange ones here. I mean, that's not going to be particularly explosive, though, buying something like that, right? That's just, people look at that optically and say it looks cheap, but the truth is it's not going to have the same explosiveness as outright puts. You got your usual bit of call selling from the overwriting type crowd. But then obviously, since the markets are reversed, we've seen a load of call buying come in March, April, June expiries. Biggest clip in June is these 35K calls, and then 25K calls getting bought in March and April. Similar sort of flows in Ethereum, about $3 billion notional trading there. And yeah, put protection being bought 31st of March, 1200 to 1300 put area. We also had we had some interesting trade into a big calendar trade that went up. This is kind of systematic call selling that's getting rolled out. So the September 1900 puts, that's this big purple bar, they were sold in size to be buying the March 16s and the April 18s, right? So people generally buying back the shorter dated stuff that they're short to sell longer dated stuff that they want to get short, basically. Okay, that's a systematic type program that seems to be trading quite big size on Ethereum quite regularly. And then the only other notable one was these 29th of December, 4,000 calls that were sold. Not a massive clip, but interesting that the implied vol on that is kind of the record low in long dated implied vol. So those are basically 9-month options, and they're trading on like a 66.5 implied vol, which is about as low as 9-month vol on ETH has ever been, right? So interesting to see that people trying to earn some yield by selling that way out of the money stuff, but quite long dated stuff as well. Okay, looking at positioning. So we see dealer gamma in Bitcoin going back to the negative side. So that was positive last week. It's flipped back to negative. We did obviously see some call buying come in as the move turned up. We can see there's a load of shorts here, the purple bars between 25k and 28k roughly. That's the area where all these March options are. 31st of March. So that's making dealers short. And that's kind of helped fuel a bit of the squeeze that we've seen as we broke higher in the last sort of 48 hours. Ethereum, not really the same story. So Ethereum, whilst it has moved down from long to closer to flat, it's still not flipped short. And if you look at the positioning, there's one big short strike around here, around 1700. But then we've got these long strikes above that, and we've got long strikes below that. So it looks like dealer positioning kind of neutral here, but probably gets longer on the wings on both directions. Whereas in Bitcoin, it's more dealers are short here and short higher, but on the downside, they're more flat, basically, right? That's kind of where the positioning seems to be in terms of what the dealers look like. So if anything, that just kind of gives you more fuel to the fire that in a rally dynamic that we're currently in, Bitcoin's probably going to have more legs than Ethereum, unless some massive buyers of Ethereum calls come out of the woodwork and take all that inventory away from dealers. But it doesn't look like that's happening without a catalyst. And you know, that catalyst seems hard to come by right now. Okay. What have I been up to? All right. That's it for this week. Thanks a lot, everyone. And till next week. Cheers.